Hey guys and gals, this is Blake Morrow, and you are listening to the daily Roundup webinar. I'm sorry that didn't really roll off my tongue as easy as I had anticipated. Um, thanks for tuning in today. Today's going to be a pretty, I want to say it's going to be a pretty quick roundup, but it's actually something that I feel is pretty important. All right, so first and foremost, let's look at the euro. The euro's come down to if you were listening this morning, I was talking about the euro being more attractive down here at the 111.40 level. We dropped below that. We came down to the, you can see right towards the channel support. Big support actually here. The reason why it's so big is it's the 618 retracement. Let me grab this fib real quick. Let me grab it. You can see it right here. Okay, you see it? All right, matter of fact, I'll make it a little bit more bold. It's a 618 retracement. We have tested it before and we held it. We came down to test it again. Also the 88% retracement right here. And the euro is getting a little bit of a lift from there. As I had mentioned earlier this morning on the FACE webinar, I was looking for the just to create a higher low, and that's what we're doing right now. Now, obviously, this has to hold. For me, it's going to be really imperative that we do not get much further than down here. All right, those levels, the euro just needs to hold above and just keep maintaining higher lows to be constructive. Now, obviously, it doesn't really turn bullish until we get back above like this trend line where you can start going, okay, are we going for the upper end of this channel? But one thing that I was sharing with the traders in our chat room earlier was that we could be developing some sort of harmonic pattern, and I'm going to just loosely draw this. Okay, something that looks to the effect of like that, maybe even further, depends on obviously what all's happening. The euro, little bit of sell off this morning. I think people were really worried about a few things. There was the bond issuance that was released today, but more importantly, I was just listening to a lot of the traders that we follow on Bloomberg, and everybody's kind of scratching their head wondering the same thing. But a lot of people feel it's probably just more positioning. One of the, I want to say, consensus trades of 2020 is short dollars, right? It's the short dollar trade, and if you guys have been watching, like going into the end of December, beginning of January, we had moves like the Aussie. It was just ripping as everybody's establishing positions towards the end of the year. And now you've got a situation where you've seen a bit of a pullback, and I think you got some traders probably paring back some, paring back some of their longs, a little worried about, their trades getting away from them. I believe that's probably the case regarding, a lot of these dollar pairs. It just kind of accelerated. Whether you're talking about the euro, you're talking about the cable, which slumped to channel or to triangle support, which I've been mentioning this morning that I'm going to be a buyer down here. I bought a little bit of cable down there near the 131.08, I think is where I originally picked up my position. I'm not sitting here convinced that, oh wow, this is the right trade. I'm just picking things up off of what I feel are key support levels, or maybe a key resistance in the dollar index, which we'll talk about here next. I'm not going to cover every pair because this is just a quick roundup on what had happened today. But I feel that the location, depending on the currency pair that you're trading, the location for dollar shorts at this point in time is not a bad place. Just if you would have asked me earlier today, like about the cable, when we were trading at 132, I would have said, it's probably a good place to be a seller of the cable up at 132, and here we are down near 131. And yeah, this is the place that if you want to be a buyer, if you're bullish, this is probably the place that you want to be long. And the cable's a situation where I think that, the market turned grossly bullish really fast regarding Brexit. So I think this is just working off a lot of the previous bullish pressures regarding the cable. Now, a few other, let's see, which other pairs that I really want to talk about. I discussed yesterday the dollar Canadian, and I discussed that crude was weak. I believe it was on this Roundup webinar that crude was weak, probably lead to some dollar Canadian buying, and we've rallied back. We're really challenging this previous support over here, and as I mentioned to you guys yesterday, whether you were listening to the Roundup or the Face webinar earlier today, I'm not convinced the dollar Canadian is going higher, not yet. We do have the Canadian jobs report, which we're going to have to see some pretty weak Canadian jobs report for me to convince that things might go the other direction. But while we're below this broken trend line, this big broken trend line, let me pull up the daily really fast. Okay. While we're below this big daily trend line, this big triangle, the dollar Canadian is bearish. So I think you need to look to sell it on rallies. Now, am I comfortable, being a seller at current levels? No, I was more comfortable yesterday buying it down here at 129.60 versus where we're at right now. But I think if you really want to be patient, see if the dollar Canadian can rally back to 131 and then be a seller. If you get that opportunity, I'm not saying that you're going to get it. You may not get it. I mean, the dollar may stay weak. We might see the euro head back to 112, the pound back to 132, the Aussie back to 69 cents. And where's that put the dollar Canadian? Well, realistically, the dollar Canadian, instead of being where we're currently at, will be right back down at support and maybe even lower. It's quite possible. So, I'm not convinced about the dollar Canadian going up just yet. Like I said yesterday, I was more convinced that we're going to get a bounce. We got it. Now, what do? I don't know. Maybe the better trade is, waiting for some more clear resistance, maybe up here where everybody thinks, oh, look, false breakdown. And then you get, they're getting long, and then you sell it into 130.50. That might be a trade, maybe even going into Asia later tonight. Might be a trade. One last thing I wanted to bring up really quick is the dollar index. So the dollar index, keep in mind, the dollar index is below this. Whoops, I didn't want to do that. Let me delete that. It's below this broken channel. You see this broken channel that was, we were in there since, 6 months basically. Broke down, kind of had a hard time breaking down. And it's the dollar. Keep in mind, the dollar has been in rally mode for quite some time. I mean, we've been in rally mode really for the last 10 years. The last, you could argue the last year and a half has been more sideways, but, we have had a pretty bullish run with the dollar index as of the last few years, and it's been a really good run. It's getting a little choppy. So the bulls aren't going to give up that easily, obviously. But what I'm looking at here, and this is a little contradictory because this is a bullish wedge. Bullish wedge, the reason why it's a bullish wedge is because you have consistent highs, right? You have consistent highs here, and then you have higher lows. It is a bullish wedge, but that does not mean we can't break lower. The propensity of a wedge that looks like this is to break higher, but considering that we've had this bit of a downtrend for the last, couple months, that means that we could actually still, sell off. I'm, obviously with the positions that I have on right now, I'm hoping that we go to hell in a handbasket in the dollar index, like right now, this second. That's probably not going to happen. But what I'm thinking is, we might bounce around like this to the end of the week and then really find a direction following Friday's non-farm payroll. That's what I think is more of a realistic expectation going into this week. Does that bode well for volatility this week? Unfortunately not. Unfortunately, that means that this week might be a week of consolidation in the FX market, which sucks. It feels like that we've had how many, it feels like a whole year of consolidation. But in all actuality, it seems like we're setting up for a bigger move on Friday. If you want my opinion about trying to forecast going into the end of the week. But we'll see. We'll see. What goes on the next couple of days. It is only Tuesday, so keep that in mind. So guys and gals, just remember, Euro's coming down some pretty attractive levels. The dollar basically is up against resistance. Think about that with the trades that you're taking, whether it's the dollar yen, Aussie dollar, Kiwi, dollar Canadian. You got the dollar index up against some pretty key resistance here. Do we have the gusto to really break out to the upside without any macro data backing it up? I would say in this environment, probably not the best chance. It can still happen, but it's just, probably not the best chance. Anyway, so guys, remember, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days, and especially while you're trying it out, you can jump in the chat room with us. So this is what the chat room looks like. If you guys want to, know, this is like, the chat room where I'm at all day, and, we're all chit-chatting around and sharing charts, and there's Amanda, and sharing some analysis that we get from around the different banks. Hope to see you in there. So we'll see you tomorrow. My name is Blake Morrow with ForexAnalytix. Have a great day.